Hey folks, Stanford here, the rate update. Today is November 2nd, 2021. We come back, it is Federal Reserve week. Tomorrow they're going to come out and tell us what they're going to do. I'm going to give you a little insight on what I think they're going to do next. So don't go away. We'll be right back. Okay, so first thing, let's get this clear. What does the Federal Reserve do? Well, they created for two mandates. One, full employment. Two, price stability, basically keeping inflation in line. What they've said for the past year or two is they don't care about inflation. They just care about employment. And they're really not going to do anything in regards to rates until 2023. And they announced that back in March of last year. If you go back, and I tried to find my videos, I have over 1,000 videos. I couldn't find the two that I referenced it, but I just called them out at that time and said, BS. There's no way that you're going to wait for 2023 to start raising rates. But let me give you that data. Here was the AP thing that I referenced. I found the link. Okay, so it's basically said the Fed isn't expected to do anything until 2023. Well, first off, let's talk about what they do control. They control basically one piece of the money supply or money piece, let's say. It's the federal funds rate. It's basically the rate that banks charge each other to lend to each other. It has nothing to do with mortgages, but it's the benchmark that people follow. Okay, and then what the Fed did about a year ago is they came in and did another quantitative easing, and they started buying back treasuries and other mortgage-backed security bonds to kind of keep yields down and everything. So let's go over now. The tune has changed, and it's running right in place on what I expected. Fed expected to keep its key rates near zero through 2023. I said BS. Well, now let's see what they're doing. Fed is expected to announce end of bond buying program as investors see clues on first rate hike. Okay, so now we have that they're starting to reduce QE, and now they're hinting of rate hikes. Guys, it's only 2021, right? Okay, they said back here it's 2023. Investors expect a fast pace for the Fed rate hikes. What's going on here, folks? Now they're talking about rate hikes. Remember back here, nothing's going to happen until 2023. And then the Federal Reserve in a jam, and that's bad news for investors. Okay, here's one of the videos I did back when, and you can look these up, August of 2020. The quality is terrible. I look a lot younger there. That was a whole year, a little over a year ago. Look at 400 views, and we've grown a long way since that time. I debunked it at that time and said there's no way that they're going to hold off what they're going to do. So basically what the Fed's in a jam right now. Here's what my anticipated thoughts are on all of this. And then I'll put it in more context later this evening on my detailed video. Fed's going to come out tomorrow. They're meeting and they're going to say, we're going to start easing. Now, a lot of consensus right now is they're going to start, I didn't say easing, they're going to start drawing back on their mortgage-backed security purchases, on the bond purchases. What that's going to do is create or make the prices start to drop for the bonds, a lot of bonds, and the yields starting to go up. But when the Federal Reserve kind of hinted at this a couple weeks ago, we saw this. Bam. Okay, so let's focus in on this right here. All right, we saw this, as that's what I said the bam with. Okay. So the market's already overcorrected. And what I say in a lot of my videos is what happens is everybody trades on the rumors. And then once the facts come out, it's already done. And the markets usually have a sigh of relief. So here's my thoughts are going to be off of this. We had a huge drop in what's going on here. The price of mortgage-backed securities. Raising the rates. Okay, we overshot, and the markets always do this. They overcorrect, correct, or they over exuberate in regards to things, and then they stabilize. Look what happened once we hit here. And no, there's really been no news other than the Fed coming out and saying, yeah, we're going to start tapering. We're going to start tapering. And look, the market's rallied. Okay, so we overcorrected. That's why I said, if you watch my videos from about a week or so ago, I'm not locking anybody because this is it far overshot what my expectations are. So what the economic calendar is for this week, all we really care about is what the Federal Reserve comes out tomorrow and says. Plus, we're going to have some payroll numbers in the morning. So payroll numbers are going to come out first thing in the morning on Wednesday, and then the Federal Reserve isn't going to really tell us what they're going to do until later in the day. So I see the markets, or I thought the markets were going to be stagnant, but look what's going on right now. We got a rally in the market. They're up 13. It was up when I started the video. Pay attention to that number there. We were up 8. So it's still, the higher this number goes, the lower rates go. Let me just leave it at that, okay? Intraday, here's what's going on. Now, this is a little concerning, or it was when I started the video. We had a nice rally all the way till here. And then it was nothing but candlesticks, red candlesticks down through. This represents, red candlesticks represents aggressive selling. So when people start selling, you can see the prices go down and yields go up. Now we started seeing some buying. So I anticipate this number pretty much being flat today and flat tomorrow until the Federal Reserve really comes out and announces what they're going to do. What is going on with mortgage rates today? Well, right through here, we're posting the 30-year, the 15-year, the FHA, the jumbo, and the 5-year ARM. These are not my rates, guys. These are the national averages. This is the headline news that comes out, and I do post this, or I try my best to post this newsletter at the end of every day so you guys keep abreast of what's going on in the markets. But right now, the 30-year fixed rate is down 4 basis points than where we were yesterday. It says right here. So let's go across this and I'll explain it to you. Today's rate, 318. Yesterday's rate, 322. The change since yesterday is down 0.04. That means 4 basis points. And then the 52-week high and low, 275 and 345. So we're off of this and off of that. So we're kind of right between, which is kind of cool. So rates aren't going skyrocketing high, but even if they did, I did a video yesterday. If rates hit 4%, is it pricing you out of the markets? Probably not. You know, home values are going to start cooling. I can promise you that. And then you start going through the 15-year, the FHA jumbo, and the 5-year ARM. 5-year ARM had a big jump yesterday. Look at this. Went from 3.09 to 3.4. Huge jump. So now you can get a 30-year fixed at a lower rate than you would a 5-year ARM. Why would you take the risk of the 5-year ARM? So that is my mortgage report for today, this morning, the rate update. Later on this afternoon, I'm going to come back and go over some additional details, and we're going to dig into this. And I got a special for you at 5 o'clock today. So please tune in then. If you like my videos, please don't forget to give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. Take care, guys. I'll see you around 4 or 5. Bye-bye.